One of the most exciting conference calls I have been on in ages, Carl. It's Micron. They didn't just have an earnings beat. They had a major inflection moment. And it's so good to hear for the entire industry, which you'll see being flying. Positive outlook for the quarter ahead, boosting the stock rather radically. CEO Sanjay Mehrotra joins us now. Sanjay, this was so exciting to hear you say the things you said.
First of all, Jim, thank you for having me on the show. And yes, in our fiscal first quarter, Micron exceeded the revenue, EPS, gross margins versus the guidance that we had provided in the September quarter. What we saw versus our expectations in September was that the pricing trend was even stronger than what we had expected back then. And of course, Micron has been able to capitalize on this. We expect pricing to continue to increase. And this is because of the improving demand-supply balance. And we see that Micron financial performance will continue to gain momentum through the year as pricing continues to improve. We guided to return to profitability in our May quarter and return to free cash flow in our August quarter. So we are excited about the opportunities ahead, and we are well positioned with our technology, products, manufacturing, and customer relationships.
All right, now, people need to know, because I speak to you after every quarter, this is it. I mean, you have told me many times, I'm preternaturally bullish, and you told me many times, hold back, Jim, hold back. Not yet, not yet. You're not saying that, and you're not saying it for PCs, which you are calling the bottom. For mobile, you're calling the bottom. For automotive, you're calling the bottom. For industrial, you're calling the bottom. How is this going to unfold?
Well, Jim, in terms of over the last 2 years, we have seen that PCs and smartphones have seen significant declines in terms of units being sold in the market year over year. And we see that in calendar year 24, PCs, smartphones, servers, they will have modest unit growth. But what's exciting is that they will all have increased content in them. AI is driving increased demand for memory in data center applications, as well as across the edge in smartphone, PCs, automotives, and various industrial applications. Along with this, customer inventories have normalized in smartphone and PC markets, which have been large for us. Data center inventory continues to be somewhat high. We have said it will normalize in first half of calendar 24, and that will then enable a further boost to the demand. So it's really these market trends, and AI is bringing in increased unit content. AI is driving more demand for memory in data center as AI proliferates from training to inference, but AI is also proliferating to edge. You will have smartphones that will have AI capabilities that will be introduced in 24 that will start resulting in increased opportunity later in 24 and building into a full year of momentum in 25. PCs, same thing. AI PCs will be introduced in 24. Later in 24, they will start being sold in the market and become a full force in 25 timeframe. And think about it. These smartphones, these PCs with generative AI capabilities being implemented in them, large language models in them, they require 4 to 8 gigabyte more memory in the AI-enabled devices. That translates to about 40 to 80% growth in PCs versus a standard PC for DRAM content. It points to 40 to 80% growth in smartphones versus high-end smartphone DRAM content. So yes, AI is enabling strong opportunities for us from data center to the edge.
Now, people have to understand, you have said over and over again, glut, 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 too much inventory, glut. This time, you were talking about how there is so much demand that we're going to see continued price benefit. So this is not a one-quarter phenomenon.
This is not a one-quarter phenomena. We see strong demand-supply environment, improving demand-supply environment through 24 and 25 timeframe. We have said that we expect record revenue TAM for our industry in calendar year 25. So Jim, we talked a lot about the demand drivers. I think the other side of the equation, which is very important in the memory industry, is the supply. And what's been happening in the industry is that capex has been reduced. Factories have run underutilization in order to bring supply in line with demand. Yes, over the course of last several quarters, there was excess supply, and now that supply growth has been significantly cut back. And another important factor, Jim, is that there is high bandwidth memory that is needed in data center applications, and that high bandwidth memory needs 2 times more wafers to produce the same number of gigabytes as standard memory. And what that does is, in this environment of cutbacks in capex, cutbacks in wafer production, it's resulting in more shift toward high bandwidth memory, which is higher profitability, high revenue opportunity. It's leaving less memory for the rest of the markets. So supply is getting constrained. So demand and supply balance is going to continue to improve through calendar year 24. We call it the year of recovery because we have had such steep decline in prices and such steep demand-supply imbalance over the course of last 4 to 5 quarters, that 24 will be a year of recovery, improving trends in financial performance, gathering momentum for us, and we plan to be extremely disciplined when it comes to supply management, and this will all result in a strong 2025.
Wow. Sanjay, it is so great to hear your voice and to hear you like this after so many times where I tried to get you that you just are a truth taker. You would not say it before it got to the bottom. People need to know this is a very serious call.